Morning. How is everybody? So I'm wondering, is this going to be an impeachment crash or an impeachment rally? Or is it just going to be the latest ridiculous goings on? Anyway, we look at the markets and see what they're telling us. That's where yeah, exactly, Alex. Probably another frog in the blender day upon us, but maybe things are starting to shape up. Maybe it's wishful thinking on my part, but just looking at the charts here, looking at the Dow futures, they're down where the buyers should want them, right? I mean, there's been damage done as I look through the charts. Amazon, Facebook, the leaders, they had been lagging already, so it does make some sense that they succumb to a more selling, but you know, Dan will cover some of the gappers, but the Nike move, I mean, there's pluses and minuses out there, and there's a tremendous amount of uncertainty. But, so we look at the charts and see what are they telling us, what is actually as normal as we can call it in this market. But, nice rally up into resistance. We know there's going to be sellers there, and it's clear that they were. Now they're pulling back to this minor support level that we've been aware of and talked about earlier in the week. So you see the stabilization here as retesting. So move down, squish this up a little bit. This was the area that we were looking for prior to see if prices could break out to the upside or whether they were going to break down. And they, as this market does, make the peekaboo under, rally back up, back down, test the next support. So we're always looking to the left to see where's the next level when one breaks. So with that being said, well, we can look at what is there, what's there to the left. We can also look at what's created. So this climactic drop to the downside created a pivot, and now it's retested here pre-market, and buyers are stepping up there. So now, can this potential W pattern, right? We can see the retest there on the daily, retest or retrace back up into this area. So right now, there's no pattern here to say we should want to get involved. Looking at this pattern, this could be anything. And so when I'm speaking about what is right here that we're looking at, I'm talking generalities as well that could be applied to any market. Futures of currencies or ags or Apple computer, it doesn't matter. It's all the same stuff. So created a level there, retesting it. Question is, can it get above here, or is it going to go sideways, and test the 50? Excuse me. I don't know. We're waiting to see what happens here. We don't have a setup here that I want to participate in yet as far as this goes. Need more information. And we see the weekly, the deep retracement, that's bullish. It's like, that's bullish. It's pulling back here. What theoretically, after, again, we're talking historical patterns, that's all we have to go on to form a bias, is to say that deep retracement was bullish. This pullback should be shallow and buyable to where the turn comes, it pushes up to new highs. Now, we don't have any turn yet, so we're waiting. We're waiting for that to form. So we'll see if it does form or whether it goes back down to the bottom of the range, like this stuff. So, same thing. We're looking for information. S&Ps, wide bar down into the minor support. It held, same pattern, big drop, retest, little peekaboo, new low, W. For a day trading setup, this is pre-market. This is something that I would consider as a long, as a scalp, and to see if it could get through here. It's kind of set up where you take some money between here and here, and you got to be nimble, used to doing this kind of a trade. And of course, it could go down, and we could utilize, and we would, the 5-minute chart or even the 2-minute chart, like the lesson that we went over yesterday in the NQs. So we'll see if it can get through here. There's a void up above. If it can't, Well, let's just squish this up. Squish, squish, squish. We see that if it fails here, it should be a good trade on the short side because there's little to nothing below here. There's little, little blip right there. I don't know that it could actually stop it, but the big support would be way down here. And we do take note that the 50 MA is sitting there as well. And you always want to look at the cues when it broke through the 50 MA, where it tried to hold there. So it's going to be in a different place than the futures, since the futures are calculating 24 hours. So let's just poke this down here. And we see that it held. It's bouncing up. You see how accurate this is? Just looking to the left without the noise of fib lines and trend lines and all of that. You just look over there and see where the buyers were before. Is there a pivot? If there was, recognize it and see what happens when prices get there. So we don't know what's going to happen. We wait to see a reversal bar. Sometimes we see levels like that and prices slice right through it like it's not there. And so what happened there? Well, obviously there's more supply than whatever demand was created there, and it just crashed right through it or sliced right through it. So we'll see if this holds now that we've got this pre-market level. And on the Qs, right, we've got that pre-market level, so on. I mean to drag it so far. Anyway, there you go. And you see it didn't get exactly there, but that's okay. When you look at support and resistance, look at it as an area. Don't look at things as an exact point, like you might if you were looking at Fibonacci retracements to within, a fraction of a decimal. That's just not how the markets work. This was how you're going to be led to believe that they work by the Fib people, Gann people, Elliott people, all to think that things are pinpoint accurate. That's more of a, deception of reality of what actually happens. And the S&Ps, Greg, when Qs broke out of 2-month range and came back into the range on volume, should go to 7,400 again. And so I'm making the NQs. 7,400 again. It's hard to say. I mean, we could have that bias based on this double top and the size of this breakdown being an igniting bar. I wouldn't disagree with it. So while we started with that as a possibility, this isn't much. This is rather significant, 75.90. So we just can't ignore that, which is that level here. But as things become more bearish, right, unless prices are in a downtrend, to a certain degree, we have to discount. I can't say ignore, but we have to discount the support or make the assumption that prices will get through it until they get to a significant level, which this is a significant level since it was tested 3 times. So I'm always have to look at possibilities, but be open-minded about those possibilities, because otherwise you can get caught in, your own self-denial about something actually turning around. But we've got bar by bar analysis. So, well, as I said, that's a possibility to go down there. If today this red bar was ignored, I think that possibility goes out the window. So if we were to say, let's agree for now that prices will go down here and say, well, it should get through here. These are all opinions. But if today turned into a big green bar that closed up at the top of that bar, we would have to recognize that and say our bias of coming down here really doesn't have the validity of bar by bar analysis and retracement analysis to stick with that bias at the moment. So that being said, bar by bar analysis is one of the most powerful concepts that I decided for myself to use for my own safety. And when I say safety is because human nature is such that once you have an opinion and you've put your money on that opinion, there's a great tendency to be stubborn, let's say, and bar by bar analysis will put reality in your face as well as your losses. So we'll see what happens. S&Ps, same story. We've got it's holding here for the moment, but the wide range bar down, right? Our factory work says, hey, whatever this is happening here on the smaller time frame, whatever it does, as long as it stays in the lower half of this big red bar, it suggests that buyers in this level area here can't push it very far up, even with a retest pattern. So if this stays down at this level here, well, then that opens up the door to, hey, the 50 is in alignment with pretty much nothing. It could be a stall point, but it really opens up the door to, again, we go step by step, coming down here somewhere, right? So we'll see how how today evolves as to the intraday patterns and what they do in relation to this big red bar. A lot of this is common sense once you come to learn the thought process that we go through. And so in the chat room yesterday, Debbie said, this market is so confusing, and I forget exactly how she said it, but to commit to any confusing. And I said, yes, agreeable in this time frame. I said, but let's do this. Let's switch out to a weekly time frame. Let's go to the monthly time frame. Let's go to the quarterly time frame. And as we condense the data, things become clearer and clearer as to what's going on from those time frames. But the time frames that we're operating in, especially as intraday traders and as a swing trader right now, are difficult. So it is what it is. So while we can look at higher time frames and see that and learn from it, we operating in those time frames. And so going to the bigger picture, we say, well, you know what? All of this right now is just noise within that big picture. So let's just sit on our hands in the time frames that don't make sense. And if you're a day trader, you don't have to be. If you're a day trader, there will be opportunities in some smaller time frames. And if nothing makes sense, go to the beach. Come back tomorrow. If you're trading and you got slapped around 2-3 times in a row, which is unpleasant, take the day off, put the mouse down, go watch and see what's happening, review your charts, but don't keep fighting. Deeper retracement on the Russell. Now this chart is something where it came down, it's on the 50, it's at the area where it broke down from. That is interesting to me. As something to keep an eye on for a turning point, because it's retraced. Let's just eyeball this. I don't know, a little less than 50%. It's on a reference point that's followed. It's on a breakout area. It's where buyers should want to step up. So I would be interested for this particular instrument to see if it could bottom out. And so what we covered yesterday in yesterday's lesson was how to recognize the turn. So this is, igniting a blast off. Now, this new low happened on slowing momentum. Those looking at indicators would say, oh, there's a bearish divergence. Well, we don't look at indicators like that. We recognize what price is doing. So this is still supportive of a move lower, right? But if we were to see the next move lower, which is where we saw yesterday, where it was even closer to the prior low and turn, that's where we bought on a 5-minute reversal. And when it came up here, it couldn't get through it. And that's where it failed and went down. And then some news came out and it was a wide range bar up, and just the insanity that, goes on in this market right now. But recognizing, how things evolve between multiple time frames is a major part of what you need to learn about technical analysis and trading anything. Oil, right? Deeper move coming down into that 50. No stabilization whatsoever yet on the 60-minute chart. And you know what, just to condense this rather than squish it, I'm going to turn it into a 180-minute chart. Nothing special about that. I just want to condense the data to see what's to the left. So maybe it's got a little bit more to go. I see this area down here, which is, you know, right there. Maybe those buyers will step up there. Not doing it yet. Bonds, a little sideways action. Remember yesterday we talked about that we're in a sell zone for these bonds. And if they can roll to the downside, if they do, right? They didn't yesterday. Zone means area. If they do, that would be supportive of the market going up. Well, they didn't. So this little sideways action here, right? We've got what could be a climactic run here on the 60-minute wide range bar after multiple bars up, right? That's all part of MTS, how we understand bar by bars and candles. Climactic run, triple top, breaking below here is going to bring in some sellers and bonds. And theoretically, that is going to support this pattern right here, being able to poke higher. So we'll see if it can get through here. Right now, it's in a downtrend with slowing momentum. If it can get through here, that opens up the door to a deeper retracement. So we'll be watching for that. So there's the bonds. We'll see if it turns there. Could just be a stabilization day. You know, we've got this crazy news going on. You know, so sometimes wide range bars, and it happens a lot of times, a wide range bar is followed by a narrow range bar. And then it breaks. So, you know, this impeachment nonsense that's going on, who knows? Maybe who knows if it's nonsense. Most of everything's been nonsense, but we'll see what happens. But just looking at the charts again, this could be a narrow range day where it's just really choppy and traders are just trying to figure out what's the next tweet to come or, you know, news item, and well, maybe it's tomorrow. I don't know. You know, it's just, we have to look at the charts and say what's going on. And so right now, as I'm seeing things, maybe we're at a point where things could turn around. Maybe bonds turn down, S&Ps stabilize here a bit more, try and retrace up. But if they can't, right? I hate all the ifs, but that's we're in like if land here right now. If they can't and bonds actually start pushing higher, that would be something to say, you know what? This isn't holding. And you better start thinking about the possibility that this is going down. And what Alex asked me about the possibility of this coming down here. So the information required to lean more toward this bias and the gas on the short side is still evolving. So we'll see. Gold is down here. You know, it's just popped off of this low. No big deal. Hasn't retraced that far into that daily bar. So looking at a miner that says, hey, this is down 5 points. You look at the chart, you say, well, that's no big deal. And silver, you know, consolidating at the top of the wide range bar, you know, that choppy stuff here and so on. Marsh is asking me why MPC is gapping up. I don't know, Marsh, why MPC is gapping up. I haven't checked the news, but I suppose there's some news. I'm sure if you went to Yahoo or Google and typed in the symbol, it would tell you what the news is. Right? Elliott Management. Some Paul is telling me Elliott Management. What you say you want about Trump has made day trading great. If you're nimble, George, right? Yes. Day trading is always great if you have a plan on how to do it. Otherwise, it's a nightmare. It's a spinoff, March. Right? I only trade for 2 hours a day and I miss the lessons. Is it possible to send the lessons by email as a video? Howard, I would be more than happy to do that if I recorded the lessons. Almost everything I do is in the moment impromptu where someone asks me a question and it evolves into a lesson. But I would be happy if you were in the room at any other time where it's kind of midday, whatever, to go, hey, Greg, can you go over a lesson in multiple time frames? I'm happy to do that for everyone, where, trading is slower. Right? All right, let me give it over to Dan because it's getting late.
I thought you were going to give us another lesson.
Well, I'll leave that to you. You got 10 minutes.
Yeah, no time for lessons. It's time for review and gappers. We're actually flat in the weekly options trader. So Greg, I'm getting emails, people saying, where are my trades? And I had to give them the same answer of, look, I don't force trades. I mean, things have been,
Well, Dan, here's a better answer. So here's a choice. I can do nothing for the moment, or I can send you a trade in the next 30 seconds, but you might lose money on it. Do you want it? You might ensure that you're going to lose money on it. Do you want it? If you want entertainment, I'll entertain you.
Well, I mean, after the fact, looking at this, bear call spreads would have worked nicely, but let's go over opens real quick. CPRT, we're long stock coming in. Delta Kilo was a beautiful 1, 2, 3 breakout here, and it's sloppy like the market is. EIX, very nice put spread. Today's Wednesday, so we did that on Monday's breakout. ENPH, we have a put spread way down here on this breakout day there, and that had an ugly day yesterday. Hess, we're short puts. We'll take assignment if needed. Kilo, cover call. It's been in a coma, but being short the call is doing its job of lowering the cost basis and us making money even though it's in a coma. LII, we're short stock on that sell setup. MCK, we have an Iron Condor, so short out of the money call spread, short out of the money put spread way down here at 135. MSI, we did a put spread yesterday on that gap breakout, closed with a big old topping tail, which it shouldn't have done, but we had the 165s way down here. Oscar Charlie, we have a covered call and a put spread. SITC, long stock, half lot. Actually, over yesterday's high, we can add the back half. Teradyne, put spread. I'm sorry, we have a bull call debit spread. Terp, long stock, as a pig target, looks good. TYL, covered call. Whiskey, core trade, covered call. That still looks great. Someone on YouTube's asking about ISRG. Yeah, we actually found that yesterday during scanning. Had a nice rally here, resistance, slopping around. And it's kind of a big W pattern with a higher low on the weekly, monthly trading range, but still looks good. So yeah, it looks good to me. Maybe 30-minute high. And I think I looked yesterday for put spread, and it's just very spreading. Midco gapping up $2 to 49. So it's gapping a resistance, but maybe 30-minute high. This is a bull, not a flag, but a kind of a bull rectangle. Had a big run. There's my flagpole, and it's resting for 3 weeks, which a very shallow retracement. So that's strength. LCI getting whacked here, 1130. So I mean, that could be a day trade up or down. I have no idea what it's going to do. SNX 105, very bullish gap. Now, just hypothetically, if this were gapping, let's say to 100, then that would be a wonderful 10-minute high trade. So now it's gapping up 10 bucks. That's over 10%. CMTL 33 and change. Bullish weekly. That's a bull 1, 2, 3 on the weekly. But I would have said, if we were in it, I would have said target somewhere 32, 34. So the gap's too big. SAG 28.84, gapping right here to the 200. Nothing, no good setup. Full, all three of these got upgraded. No pattern though, 4037. KBH, it's, you missed, look, there was your no-brainer entry right there. September 11, right there on that green bar. But now it's chasing. So where are these analysts, you know, giving upgrades? I guess they don't look at charts. 56, Lennar, we were watching the last 2 days. But again, it's chasing now. BBY had some type of news. All right, 68.50. If this one were gapping, you know, 69 area, then that would be a tier 1 gapper. It's still worth watching. I put it in the upper right screen here. If that can hold the gap and take out a 30-minute high, it's kind of, you know, a sloppy reverse head and shoulders, head, left shoulder, right shoulder, the MAs flattening out. So today's MT Live is on using moving averages and see for, so what is a moving average? Well, it's very simply just taking X number of bars and dividing by X. So the fact that it was in a downtrend and is now going flat is just visually telling you that it's the downtrend's over and it's building a base of support. Well, not that the downtrend's over, because it could be a consolidation in a downtrend, but it does mean he's getting his sea legs back. 262, that's a bullish gap, but there's no price void. WOR 35 bucks, that's a bearish gap. And I see some topping tails here pre-market. That could be a day trade to 34. Abco 272, that's a bearish gap. That's a call spread candidate. Let me put him there. LRC and PCRX gap into 40 bucks. All right, that's a bullish gap. That's a 30-minute high candidate. Let me put him down here. See how we don't care about the news? I don't care one iota. It's a bullish gap to here with a price void. So let's see. Now step 2 is, you know me, I just got a 2-step process on gaps. It's a compelling gap with a price void. That's number 1. Number 2, compelling intraday setup within the first 30 minutes. It's that simple to me. Look at Nike here, gapping up to all-time highs on earnings. Hey, Howard, do me a favor and put your drop down to all panelists and attendees. So you see BBY is already weakening. Nike is obviously a bad tick here. You can see there's no prints there. That's bullish, Nike. Not marijuana, big tobacco is in the news again. Papa Mike. If this holds, put spread candidate, that's a big gap. Target 80 bucks. Mighty Mo, we shorted this thing on the breakdown right here. That was a beautiful, beautiful short. And we just trail stopped out, covered half at the dead low, and it's still lagging. So Papa Mike is much stronger technically. ANSS is a big old mess. The call spread candidate. Alex CTOS. It's a day trade only if it sets up. You know, it's getting close to the target already and resistance. So if it were gapping just over the bar's high, I would like it better. But you know, with these, when they gap too much and they're eating into my target. Look at Boeing here. I always watch Boeing in a 15-minute chart. This is a put spread, McGraw. Why don't you check put spread under, or I'll do it here, 374. Say, wait, again, we don't care about the news. This is only acting bullish because there's more demand than supply. $10 wide for Friday is 55 cents. And that's the 372.5. That ain't bad. You can even maybe even go tighter to 375 and put your stop under 375. So $5 wide, 375, 370 is 48 cents. That's I'm liking that one. Let's watch it here on a 5-minute chart.